you can make an informed decision on which asset class you should invest your money in. Again, both are great. Maybe you should use both. Hey, this is Matt Pichet, the Fruitful Investor and your investing coach. And today's video is about stocks versus real estate investing. Which is better? So in this video, I'll be going over the pros and the cons and the different nuances between each investment strategy so you can make an informed decision on where you should put your money, or even in both strategies. So let's start with real estate. The number one difference between real estate and stocks is that you have a real physical asset. Okay, whereas with stocks, it's paper money, or in this day and age, digital money in a sense. So the big difference is that you have an asset, you have a real physical asset. And this is why a lot of real estate investors like this as a pro, because you have more control on your money, which is number two. For example, if you want to raise the value of your investment property, you renovate it. If you want a tenant, you can easily not renovate it to a near extensive level and have a tenant come into it. So you have more control. You have more control over your asset in a sense. You can raise the value if you want, or you don't have to. Whereas with stocks, you have no control at all, really, because the business owners or the board of that business make the decisions, and hopefully you gain from it. Now you can do a lot of research, obviously, on the business you're going to put your investing in stocks in. You can look at the financial statements of that business and make an informed decision. But in reality, you have no control over that stock. Whatever the board does or the business does, the repercussion is either positive or negative for you. Whereas for real estate, you have way more control over that asset and your money. So the third difference, and kind of a con, is that you need a lot more money down in order to buy a rental property or an investment property, whereas with stocks, it's really a one share minimum. So that can be $1 or less than $1 for some stocks. It could be $10, $100, it could even be several thousands of dollars, but the minimum is one stock, whereas with real estate, you need way more money down typically. Now, there are people who can say, yes, you can get partners, which is what I do. So I attract partners and I coach them through the whole investment process. If you want to know more about that, you can click on the links below this video. But yes, you can have no money down essentially, but you still need a partner or somebody who's going to give you a lot of money. Now, typically in Kitchener, Waterloo, and Cambridge, to buy an investment property, a single family investment property, you're going to need at least like $50,000 to $70,000, okay? Whereas with a stock, like I said, it can be as minimum of $1 or less. So big difference there. That's a pretty big difference. So number 4, you can't be in debt really in order to buy an investment property. So you need to have a good credit rating, a decent credit rating. You need to have lots of money, a proven track history for the banks to give you money. Now again, yes, you can have the shittiest credit rating possible and attract a partner and have them go on title, which again, that's what I do. I have partners go on title, not because I have a crappy credit rating, I have a great credit rating, but because I can't qualify for mortgages anymore. So I need my partner to qualify for the mortgage. But again, you still need that person to have a good credit rating and good financial history so that the banks can give them money. So it's still important that the buyer can have a decent credit rating and track history. Whereas with stocks, I'll just put none of it. Doesn't matter. You can have the crappiest credit history, the crappiest financial history, but if you've done your research and you're smart now and you're sophisticated, you can still make a lot of money in stocks regardless of your financial history, okay? So that's a pretty cool difference, okay? Now number 5, the difference between real estate and stocks is that you make money 3 ways as opposed to stocks. So mortgage pay down, you have a tenant, they're paying down your mortgage, the property is appreciating in value, and it's also giving you monthly cash flow, okay? So there's 3 different ways to make money. So as the spread grows really quick, especially if you compound over the years and years, mortgage is getting paid down, it's also appreciating at the same time, and it's giving you cash flow in the middle. Okay, so that's really cool and a really big positive and why a lot of people like real estate investing, okay? Whereas with stocks, all you get is appreciation in a sense, or if you buy a dividend stock that don't have enough room, that pays you monthly dividends. But again, the main bulk of your profit in a stock is the appreciation. You bought it at $25 a share, you waited 5, 10, whatever years, and now it's selling at $50 a share. So you doubled your ROI, okay? So that's how you make money in stocks. Whereas with real estate, like I said, the spread grows up and down. So it's really cool that way. So that's kind of a positive to real estate, okay? The difference, number 6 with real estate, is that it requires much more research and time. Okay, so when you buy an investment property or a flip or whatever, it takes a lot of time to research the area. Is the GDP growth growing? Is the population growing? Is there a lot of jobs in this area? That takes a lot of research. Then when you buy the property, it takes a lot of time. You have to meet the realtor to sign the papers or go over the offer. You have to do a home inspection if you're gonna do that. That's a couple hours. The renovation process, okay, finding the tenant, keeping them there. So it's a lot more research and a lot more time. Whereas with stocks, it can take as little as 5 minutes to buy a stock. A lot of good stock, I don't know what they're called, stock buyers or stock investors, they say they can take as little as 5 minutes to research a company or as much as a few hours to research the financials of the company and make an informed decision. Whereas with real estate, it's gonna take at least like 10 to 20 hours minimum to buy an investment property and then start to finish to get a tenant in there, at least 10 to 20 hours of your time in your research. So there's a big difference there. So number 7, and the last reason I will say, is that most millionaires and billionaires have made their wealth and their money through real estate investing. You'll hear this very often if you look on the Forbes list and do the real research. Most billionaires and millionaires make their money in real estate first, and then they often do what they really want to do, which is start their own business or invest in other businesses or whatever. But the foundation and the truth is most wealthy people make their money in real estate, okay? So for me, as you know, I'm a real estate guy. This is a real estate channel. I want to do whatever the most millionaires and billionaires have done and recommend, okay? So I want to do what they're doing, and also less than 1%, I'll just squeeze this in, less than 1% of people own more than 2 or 3 rental properties, okay? Let that sink in. Less than 1% of people own more than 2 or 3 rental properties. So if you own 4, 5, 6, 10 properties, you're like in the 0.1 percentile of people, okay, who own more real estate. So again, I want to do that in a sense. There's less people doing it, which means there's more opportunity. Whereas with stocks, most average people are buying stocks and mutual funds and RSPs and whatever. So the majority of people are doing that. And what's the reality with the majority of people? Their life sucks. They hate their life. And I'm saying that if you invest in stocks, it's a horrible investment, or you shouldn't do it because average people do it. But I'm just making it the truth known. Most people do stocks, and very little people do successful, sophisticated real estate investing, which is more than 2 or 3 properties. Okay, a lot of people own 1 or 2 properties. Very few people own more than that. So if you want to be a true business owner in real estate, okay, there's definitely more opportunity to make more money. Maybe that's why there's more billionaires and millionaires who have made their money in real estate. I don't know. But here's the top reasons. Obviously, there are so many more reasons and differences between the two. These are kind of the top 7 I kind of chose or came up with. So you can make an informed decision on which asset class you should invest your money in. Again, both are great. Maybe you should use both, but definitely different reasons and different mindsets. So again, I stand more with the real estate because I like to run a business. I like to change that business with renovations or having control over it. I like to have a physical asset. It's very important to me that I can drive by and look at. Whereas actually another reason would be because of that is it's less volatile. Real estate is much less volatile compared to stocks. You've seen or heard the crash stock market up and down. It's very up and down daily compared to real estate, where it really takes months or even years before the real estate cycles change from boom to bust, whereas stocks can change on a whim, really, any day. You know, if you invest in Apple stocks and you make a really dumb decision and put out a crappy phone, your stock goes down in like a week or a month. And same if it goes up, you know, you could definitely win. If Apple, you know, releases a sweet phone, your stock could rise really quickly. So different, I guess, different risk adverse. If you like that rush or that speculation, which I don't want to insult people who invest in stocks, but it is much more speculative compared to real estate. I find real estate is much more sophisticated and much more of a business. But again, there's a lot of successful people investing stocks and a lot of successful people investing in real estate. So that's the differences. If you learned anything, if you liked this video, please click like right below this video. And don't forget to subscribe so you get more of these awesome tips every single week. See you in the next video.
Put your money in that real estate.
Hey, before you click another video, I want to give you some free stuff. You like free stuff, right? Click on the first link below this video and get my book, Single Family Investing Made Simple, absolutely free. Read as I walk a real-life client through the entire investing process from start to finish and document it for you. Click on the second link and get my other book, The Real Estate Investor's Handbook to Freedom. This book is a must-have for any investor looking to take their business and life to the next level. And last but not least, get my third and best book, 101 Single Family Investing Tips. Inside, you'll find 101 proven and tested investment strategies that I use every single day in my business in order to grow my wealth and manage my portfolio. I hope you take advantage of all the knowledge below, and don't forget to click like and subscribe so we can get more of these awesome tips. See you in the next video.